if you're purchasing real estate, you're talking about probably the biggest purchase that any human being, that any American is going to make. And there's so much legal, technical, and accounting minutia that goes into that, that if you don't surround yourself with a realtor who knows what they're doing, an accountant who knows what they're doing, a title attorney who knows what they're doing, and a mortgage broker who knows what they're doing, you're going to leave money on the table. You're going to get yourself in trouble, period. End of story.
What's up, Miami? Welcome to the first ever episode of the Real Talk 305 podcast, where we talk to local industry experts, business owners, and generally cool people. Today, we've got Michael Ben-Hain of Millennium Accounting Miami. How you doing today, Mike?
I'm doing good. How you doing, Raul?
I'm doing great, brother. Doing great. Thanks for being on here today.
Sure.
Yeah, man, let's hop right into it. Tell us a little bit about yourself. How'd you get into accounting?
I am the president of Millennium Accounting Miami. I studied finance in college, worked in banking and financial services for a number of years. And as my career progressed, I ended up working at a real estate firm for a little while, doing internal accounting, worked at a tax firm for quite a number of years, and eventually went out on my own. And here we are.
Awesome. So you've definitely had some hands-on experience with real estate just coming into the game. And I know we've worked together, you and I personally, on that same matter. So, Mike, I just wanted to ask you, if you could give advice on the three biggest mistakes that you see people making when it comes to their real estate taxes, what would that be?
I think the primary mistake that I see, and this tends to happen more with investment properties than primary residence, is buying properties with poor titling. What I mean by that, if you're going to buy an investment property, buying it under your personal name is probably one of the worst mistakes you can ever make from a legal liability standpoint. I'll also see clients who have set up LLCs to purchase property, but then they'll go out and they'll buy five or six different units with the same LLC. And you end up with the same fundamental problem that you had if you had just gone out and bought the property in your personal name. And that's that all of your assets are in play if you ever get sued. If you're going to purchase a property, rent it out, your tenant has an issue, they fall, they go climb the tree in the backyard and they fall out of the tree and they break their leg. Hey, you know what? That's probably their fault, but their lawyer's not going to care. They're going to come after you and they're going to come after all of your assets. So if you have this property, it's in your personal name, your personal home, your personal vehicles, your personal cash, all of that is in play. Same if you have an LLC that owns 6 properties, all of those properties are now at risk in that lawsuit. The second mistake that I see, and this occurs with investment properties and with the purchase of a single family home, is disorganized or bad records. If you're going to go apply for a mortgage to buy a single family home, your primary residence, the bank is going to ask you for documentation. They're going to want income records. If you're a business owner, they're going to want up-to-date books, a good balance sheet, a good profit and loss, something showing healthy income that's going to support the mortgage that you're asking for. And with an investment property, it's going to be even worse. And then once it comes tax time, especially if it's an investment property, disorganized and bad records just make life a hassle when it comes time to preparing a tax return.
Yeah, it seems like an easy way to leave money on the table, right?
Absolutely. And that actually leads straight into the third biggest mistake that I see is not maximizing expenses. Something as simple as I've seen clients bring me tax returns for real estate holding companies, and I look at the prior years and nobody's depreciated the property over the course of 5, 7, 8 years. And it's like, wow, you just left, over the course of 5 years on a $270,000 house, you've left just north of $50,000 on the table.
Wow.
In terms of expenses. That's real money. That's taxes. That's taxes that you've paid that you didn't need to.
Sure. Can you tell us a little bit about what depreciation actually means for those of us that maybe aren't too familiar with that concept?
Yeah, if you purchase a property as an investment, you're allowed to depreciate it. Depreciation is a non-cash business expense that an LLC or a corporation is allowed to book against any fixed tangible assets that it owns. Generally speaking, historically, depreciation was tied to things like tractors and machinery, things that actually went down in value.
Right.
So it allowed a business to account for that reduction in value by taking an expense that would lower its tax liability. That expense can also be taken against rental real estate, thereby lowering the tax burden on the owner of the property. And where the genius in it lies is if you purchase a property, let's say for $275,000, I'm making the math easy.
Sure.
You can depreciate that property over the course of 27 and a half years. So you can take $10,000 per year in a non-cash expense. So if you collected $30,000 in rent, you have this $10,000 expense that you're able to take. You have a net income of $20,000. That's what you're going to pay taxes on. Later on, when you sell the property, you will sell it with its what's called depreciated basis. So if you bought the house for $275 over the course of 5 years, you took $50,000 in depreciation expense. Your basis in the property is now $225. So if you sell it for $300, you're going to realize a profit of $75,000. So that begs the question of, okay, why take the depreciation expense if I'm going to pay the taxes on the flip side?
Right.
The taxes you're going to pay on the flip side are what's called long-term capital gains rates, which are generally lower than regular income tax rates.
Sure.
So that makes real estate a very tax-favored, very advantaged investment.
Absolutely. Yeah, it's amazing all the little details that are so easy to miss out on. You know, a lot of people don't know what a 1031 exchange is, or the 2 of the last 5 years rule. You know, where if someone owns the property, lives in the house for at least 2 of the last 5 years, they're exempt from paying. I think, what is it? It's still $250 if you're single, $250,000 if you're single, and $500,000 if you're married.
Yeah,
that's incredible. You know. My sister sold her house actually a couple of years ago. I wasn't aware that she had lived there for at least 2 years. I thought she had been there for less time, and she didn't pay a dime in taxes. She just went away with like $50-something thousand clean after selling it. So it's incredible. It's incredible, man. Let me ask you, Mike, if there was one tool or one tactic that you could recommend to people so they could get their finances in order, especially when it comes to their real estate or, real estate or otherwise, what would that recommendation be?
Surround yourself by professionals who know what they're doing. That's my general advice to any small business owner, but especially when you talk about real estate, where you've got a lot of complex minutia that goes into buying real estate. It doesn't matter whether you're buying a home for your family or you're buying a property to rent or to renovate it and then flip it. It doesn't matter. If you're purchasing real estate, you're talking about probably the biggest purchase that any human being, that any American is going to make. And there's so much legal, technical, and accounting minutia that goes into that if you don't surround yourself with a realtor who knows what they're doing, an accountant who knows what they're doing, a title attorney who knows what they're doing, and a mortgage broker who knows what they're doing, you're going to leave money on the table. You're going to get yourself in trouble, period. End of story.
Definitely. No, I couldn't agree more. Thanks a lot, man. Well, listen, I really appreciate you taking the time. Where can people find you? Where can people get more information about you and Millennium Accounting?
www.millenniummiami.com. You can find us on Instagram, Facebook, and LinkedIn.
Awesome. Well, listen, man, we're going to keep it nice and short for today. Thank you so much for your time. Guys, if you have any other questions, feel free to leave it in the comments section if you're looking on YouTube. Otherwise, you can check out the information in the show notes on our website. And thank you for tuning in to another episode of Real Talk 305 podcast. Have a good one, everybody.
Thanks so much for having me, man.
Thank you, Mike.
Bye.